This is Alan Bush with the Daily Financial Forecast for Tuesday, August 23rd. Stock index futures advancing in the overnight trade. Looks like some of this linked to better than expected corporate earnings. Also, we did have European equities very resilient, trading mostly higher. But now there's a growing feeling that Yellen, at her speech at the Jackson Hole Fed Symposium on Friday, she may not be that hawkish, at least that's the feeling more recently. So that is dominating all of the financial markets, including stock index futures, which are higher this morning and in fact closing in on new contract highs, especially in the S&P 500. Our original thinking was that stock indices may just trade sideways in advance of the Jackson Hole Symposium and then advance once that meeting is out of the way. And that is still our opinion, that the main trend is higher for stock index futures, but we are actually performing very well in front of that meeting, which has to be viewed as a sign of overall strength for the stock index futures. Now, moving over to the currencies, after a couple of days of higher prices for the dollar index, seeing a little pressure today, and of course this is due to the growing feeling that Yellen's speech may not be that hawkish on Friday, so that putting a little pressure on the dollar index, and by the same token supporting most of the other major currencies, even the Canadian dollar and the Australian dollars trading higher, even though crude oil is under a little pressure. So it's interest rate differential expectations that are dominating the currency trade today. Also seeing some gains in the euro currency with somewhat better than expected purchasing managers numbers out of the Eurozone. And in the interest rate futures markets, we did have a steady trade in the overnight session. More recently, now we are seeing some strength in the 30-year bonds. And once again, this is due to the anticipated comments from Yellen. Once again, she may not be that aggressive, may not be that hawkish. At least that's the current belief for the Friday's speech at that Jackson Hole Symposium. Also, the probability of a rate increase at the December meeting now just at 50%. Our feeling is that the Fed will probably not be able to raise rates until next year. However, we do feel that inflation is likely to become more and more of a problem, and I think that will be ultimately the negative that limits any gains in the interest rate futures markets. So within the next couple of weeks, if there are any gains in the 30-year bonds, I think strength there should be used as a selling opportunity. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.